Hello and welcome to the Gold Newsletter. My name is Kai Hoffmann. I'm the @JR Mining Guy on Twitter. And together with Brien Lundin, I'm the host of this channel. And I'm really looking forward to this upcoming conversation here because we have Equinox Gold joining us. Greg Smith is joining us. He's the president and CEO of the company. First time guests on the channel. Really looking forward to this because I love speaking with producers. Always a bit of a different discussion than with explorers because we got so much more to talk about almost because they got 8 operations. They're about to produce 730,000 to 830,000 ounces this year alone. And Greenstone is a massive mine they just put into production in Canada. So lots and lots to talk about in a very short time or a very short time frame. And we'll try to pack as much information into the conversation here with Greg as we can. Before I switch over to my guest, you know the spiel. Hit that like and subscribe button. It helps us out tremendously. We really appreciate it. And leave a comment. What do you think of Equinox? What do you think of Greenstone? Really want to hear from you. Now, without much further ado, Greg, it is my pleasure to have you on the program. It's the first time we're meeting here officially as well, and really looking forward to the next 20, 25 minutes here with you.
Thanks for having me, Kai. I appreciate it.
Yeah, absolutely. Really looking forward to it. And as always, for first-time guests on the channel, we do have to start with a company introduction. Greg, just summarize Equinox for us in about 60 and 90 seconds, and then we'll get into all the details.
Sure. Well, Equinox is an Americas-focused gold producer. As you mentioned, we've got now 8 producing mines across Canada, the United States, Mexico, and Brazil. The most significant, I guess, news in the company recently is our Greenstone gold mine in Ontario poured first gold just a few weeks ago. Greenstone will now be the flagship asset of Equinox. We also completed the acquisition of the remaining 40% of Greenstone we didn't own. So Greenstone is a very large mine in Canada, brand new to Equinox, just entering production, and along with our other assets, puts us on a path here to produce, as you said, around 730 to 830,000 ounces of gold in 2024.
Oh, fantastic. Appreciate that introduction there. And of course, we have to start with Greenstone and run us a bit through the operation. Run us through it a bit. Give us the KPIs. And then, of course, I've got some follow-up questions on Greenstone and, how the process is coming along.
Sure. So Greenstone's a mine, or I guess a project we acquired back in 2021 as part of the acquisition of Premier Gold Royalties. Premier Gold Mining. And it had, Greenstone had a team, it had a feasibility study, it had a permit, and we were able to acquire that asset, close that transaction in March, April of 2021, and then start construction shortly thereafter. And, it's been a couple of years now of building out Greenstone. It's a very large mine, 5.5 million ounces of reserves, right on the Trans-Canada Highway, about 3.5 hours east of Thunder Bay, near the town of Geraldton. Greenstone will produce around 400,000 ounces of gold on average for the first 5 years, 360,000 ounces of gold on average life of mine life of over 14 years. Low cost mine, all sustaining costs should be under $1,000 an ounce on average life of mine as well. So this is a major project, not just for Equinox Gold, but it'll be one of the largest and highest grade open pit gold mines in Canada, and one of the few mines of this scale globally that's not held by a major mining company already.
Yeah, I was speaking with Rilla, and she's your VP IR, and she mentioned on time, on budget. And maybe I've watched too much HGTV there, Greg, but on time, on budget often means cutting corners. So I'm curious, did you have to cut any corners? And to explain how you managed to achieve that.
I don't think we had to cut any corners to get there. In the arc of a construction project, you might make some trade-offs over the course of the build. But really, I think, and again, full credit to the Greenstone team, they were just very, very prepared when we started construction. Detailed engineering was at 85% complete before we announced a construction decision. We'd had a third party come in and verify the schedule, the budget, and the plan to execute on that build. They had done a tremendous amount of drilling in the area of the tailings facility and the area of the mill site. So, just a lot of comfort and information on the ground conditions and what was going to be built there. Of course, in the build, you come up against some things you didn't expect. We were battling sort of the end of COVID. We were battling some inflation over that period of time. But I think the team did a very, very good job of sort of managing those issues as they arose and really working hard to keep on schedule. And keeping on schedule is the best way to keep on budget. I mean, it's when the schedule starts to blow out that you end up with the biggest issues on your budget as well.
Yeah, it costs millions just to push it back a month or two because you got to keep people on staff as well. That's the most expensive part. Greg, you mentioned that you consolidated, of course, the Greenstone asset here. You bought 40% or the remaining 40% from Orion. Run us a bit through the thought process behind it, because I think the timing is interesting because you announced that deal before even first gold pour. So you must have had a lot of confidence that everything was going smoothly, everything was going well. So run us a bit through that thought process there, please.
Sure. I mean, going back to when we first acquired Premier and the Greenstone project, at that time, we did discuss whether or not there was an opportunity to increase our position in the asset at that time. And we did to some extent. We came in as a 50-50 with Orion. We bought 10% from them to increase our interest to 60%. We, at that point, we had to look at how we were going to fund the build. And from just a risk mitigation perspective, the 60-40 split worked well for the company. And, Orion's a private equity fund. They're not a mine operator. And so we always knew, and they always knew, that at some point they would divest. I can't speak for Orion. Their timing is their timing. But I think with the market starting to improve and with, a lot of other third parties expressing interest in their position, everything sort of came to a head here over the last couple of months, where if we weren't going to do something, someone else potentially could. And we love, 60% of the asset. We've always wanted to own 100% of the asset. I think that the value of Greenstone is higher, held by one party as 100% interest. It allows for more efficient decision-making and capital allocation and management, et cetera. And so when the opportunity came for us to acquire the remaining 40%, we put as much effort as we could into getting that done. And we had a little cooperation from the market. The gold price increasing and the share price increasing certainly helped. A lot of support from our lending banks, our lending syndicate, in putting together a loan. And then very happy to have the market step up and subscribe for the shares that we needed to sell in order to raise the cash to buy the rest of Greenstone. The transaction I think it's fantastic for Equinox. Very, very accretive to our cash flow and our earnings. NAV probably more neutral, but I think that it's very high quality NAV coming into the portfolio, with Equinox being located in Ontario, which is one of the top mining jurisdictions in the world.
Undoubtedly. You said feedback from the market, because I mentioned timing. So I'm curious, what was the feedback? And maybe you can tell us a bit where the interest came from, because we always complain that generalists are not investing in our space. So I'm curious, who subscribed to the big financing?
It was very widely subscribed between institutions and retail. Some of our existing shareholders certainly stepped in and bought meaningful positions in that financing. We also had some new shareholders come in. Some, I think, that were maybe sitting on the sidelines waiting for us to do a transaction like this, or this specific transaction. We had not been shy publicly saying that our number one M&A target was the rest of Greenstone. It was always a potential transaction that could come. And I think that when the opportunity came for those institutions to jump in a meaningful way as part of that transaction, that's what attracted them to it.
No, it makes a lot of sense. And I understand the reasoning why they did that. But run us a bit through the pro forma guidance that you've updated now that you own 100% of it, and what does it do to the economics of the company?
Well, I mean, yeah. So having 100% of Greenstone, we've increased our guidance for Greenstone by, the 40% interest that we've now acquired. So that takes us up to, I think, the 175 to 195 for the year at Greenstone. Generally speaking, going forward, Greenstone will be not only our largest producer, but our lowest cost producer. So on average, production will go up, our all-in sustaining costs will come down, and of course that translates into higher cash flows for the company. So with Greenstone coming on, it's a big inflection point, I guess, for Equinox. We're done with the major capital expenditures at Greenstone. Now we're shifting into cash flow from operations at Greenstone, and now owning 100%, we've just sort of increased that free cash flow from the mine even more, pro forma free cash flow even more. So that's a big change coming for us. We've been sort of fighting for a number of years to maintain a very strong balance sheet while we build Greenstone. Now we're getting to the part where we're going to start harvesting that effort back in cash flow, reducing our overall debt leverage as well. And that's really the plan here going forward.
Tell us a bit about the ramp up process. Like you had first pour just a couple of weeks ago, so maybe I'm a bit premature asking that question. But how is that ramp up going? We all know mining, and I don't think it's a big secret. There's always little bumps in the road, and nothing works 100%. We all know that in mining. So how is it going at Greenstone?
I mean, my broad comment is that it's going well. You know, our goal here is in sort of the near term over the next couple months to crest over 60% average throughput, move that up to over 80% by the end of the third quarter, and then by the end of the year get that over 90% of planned throughput. Planned throughput is 27,000 tons per day through the crushing circuit and the mill, and we've demonstrated already that the infrastructure can handle that, no problem. And so now it's a matter of just getting that throughput up to those levels consistently, daily, in a routine manner. As you said, of course, whenever you're commissioning a large gold mine or any mine for that matter of this scale, there's always going to be something. You're going to have a burst pipe here and there. You're going to have some area that needs some refinement, and we've certainly had our fair share. But the broad comment I'd make is that everything's working the way it should be working. It can handle the material the way we thought it should. The recoveries are the way we thought they should be, and so we're happy with the way things are ramping up. And as you said, it's just going to be a daily push to get it to the throughput that we planned and get it into full commercial production, end of Q3, and then full capacity by the end of the year.
No, phenomenal. No, I'm glad to hear that. And the German word, by the way, I wanted to mention was Kinderkrankheit, and this is like bumps in the road. Kinderkrankheit is like child sicknesses, like little flus, right here and there, nothing you can't deal with, right? So that's obvious. No, I think that's it on Greenstone. I think we've covered that. I think it's all going well. Let's talk about the other operations. It's like we don't need to go into all the 7 of them, but how is it going on the operations side for the other 7 mines?
Yeah, so as you said, we got 7 other mines. So all sort of different sizes, types, whether they're underground, open pit, heap leach, milling. The next largest one we'd have would be in Mexico at Los Filos, and things are going well there. The mine is performing well. We're working with the local communities on some updated land access agreements, social agreements, and working to get Los Filos to a situation both sort of structurally and economically where we can look at investing in an expansion project there, where we'd build a mill and increase the production at Los Filos to sort of that 270 to over 300,000 ounces of gold per year in Mexico. So that's something we're working on currently at Los Filos. Down in Brazil, we've got 4 mines, and Brazil is a major part of our production profile. All of those mines are operating sort of as they should be. We did have a pit wall movement at our Aurizona mine earlier this year. We are managing through that. As the dry season is coming on now, we'll be able to do some remediation on that and ideally get back into the Piaba pit later this year. In the meantime, we have started mining in our brand new Tatajuba pit, and very shortly that's going to start contributing ore into the mill and mitigate some of the issues that we had in Piaba. And then in the United States, we have both our Mesquite and our Castle Mountain mines. Castle Mountain is a small project today, really more of a development project with a small pilot plant. But in terms of the development project itself, it's pretty meaningful to us because it would increase production from Castle Mountain to over 200,000 ounces of gold per year from kind of the 20 to 30 it does now. And that's a very long life, very attractive asset in the United States. And we just got some good news at Castle recently, where we got the notice of completion from the BLM on our permit application. We're now working with them to get to a notice of intent, which then should put us on a prescribed timeline sometime in 2026 to get our permit to do that expansion at Castle Mountain. So that's another major growth opportunity for the company that we'll start to really focus on here over the next couple of years, update the feasibility and economics, and get to a point where we can make a construction decision on Castle Mountain sometime late 2026, 2027.
Just to stay on Castle Mountain, like how confident do you feel about California right now and California as a jurisdiction? I think you're fully permitted, aren't you, in California?
We're fully permitted for operating our Mesquite mine and operating phase 1 at Castle Mountain. Okay. To expand Castle Mountain, we do have to update the permitting, and we're doing a full EIS permit on Castle for that expansion. we're not going outside our existing boundaries or really changing fundamentally the aspects of the mine. We're just making it bigger, so more throughput, more gold production. We're very confident. California, for all the sort of the negative commentary about permitting there, we've been able to operate there very successfully. Whenever Mesquite has needed a permit, or Castle Mountain, the existing operations, we've been able to get what we need to continue growing and developing those assets and maintaining production over time. The Castle Mountain mine is in an area that it's a great place for a mine. There's really nothing around there that the mine is going to disturb or cause issues. It was almost fully remediated at one point, and so it's sort of demonstrated that reclamation at Castle Mountain can be done very effectively. And so eventually, hopefully a long time from now, it'll be done again in the same manner. And so so we're actually really happy with the jurisdiction and certainly the county, state, and federal authorities that we deal with have been great to work with. So I don't have anything sort of negative to say about that. This initial permitting process from our application to getting the notice of completion definitely took longer than we had anticipated, and I think this is more on the federal side, and so that took some work, I guess, and to get to this point. But now that we've got here, sometimes it takes longer than you like, but you always get there eventually, and we see that really everywhere we operate. So we're happy to have kind of met that milestone and now progressing to the next stage.
Yeah, somebody once told me it might take forever to get it, but once you have it, it's solid. It's like written in stone. Like there's no moving, and you got the license. It is solid. That's people have been telling me about California. No, fantastic. Let's switch gears a little bit, Greg. Here, look, we've talked about the production side. I really want to talk exploration. Like, how important is exploration to you and Equinox right now? Because you haven't mentioned like over drilling here. We're expanding the resource or anything. So I'm curious, like, what kind of importance has exploration for you?
I mean, it's a lot to drill into when you've got so many assets. What I would say, just as a general comment, is I think I'm an accountant by trade. I've been a CFO and a finance guy, and when you look at return on capital, some of the best return on capital, return on investment is just drilling at your existing mines, expanding your existing resources and reserves. Because the cost to do that, where you've already got the infrastructure and the permits and everything else, it's much lower risk and it's much lower cost. And so you can get really fantastic internal returns on allocating capital to brownfields exploration at your operating mines. So that's been a focus for us. We haven't done a whole lot of grassroots exploration. We don't have a lot of sort of earlier stage projects that we're drilling out. We have a few, and I think over the next year or two, we can start to surface some of those in the market and explain what we're doing. Some are actually pretty exciting, but generally, we tend to allocate exploration dollars to our existing mines. Arizona is a good example where we started to drill out the extension to Tatajuba. That's going to become a new pit this year. We've already got all the infrastructure, so hopefully over time it becomes another Piaba, and we've been able to bring that into the mine plan very inexpensively. Greenstone, we did some limited drilling in the eastern end of the pit. More condemnation as much as anything else to confirm what's there. I think that's already going to add, over a year sort of in that eastern end of the pit there. Mesquite, we've continued to drill there and discovered the Ginger deposit, which was the new deposit on the site. That's going to be, we're stripping that now, and that's coming into the mine plan sort of by the end of this year. So we've been able to allocate exploration dollars at our existing mines, find new deposits, expand existing deposits, and then bring those into the mine plan. That's just a really efficient use of dollars. So in short, long answer to a simple question. Exploration is a big priority for us, but we're very targeted in where we expend those exploration dollars, looking for the highest possible return.
No, I appreciate that answer, Greg. And I've got a follow-up there for you, because on slide 28 in your slide deck, you talk about gold demand growing, gold supply constrained. And the first bullet point is that there's that there haven't really been any major discoveries in the industry, and total gold supply has been flat since 2014. The question now is, like, how is Equinox addressing that? And my thought, or my mind went towards, is Equinox investing perhaps in junior exploration companies to support the discovery process? Like, what is your approach to that topic?
Well, I mean, as I formally in this company and in other companies focused a lot on M&A and looking at things we can buy, things that would have good exploration potential, things that had the potential to be a large gold deposit. And they're very, very few and far between. That's why I say Greenstone is such a rare asset, because that type of deposit in a place where you can mine it and actually get permits and have a social license, to have all that line up, that takes years and years and years, and tens or hundreds of millions of dollars. And so what I would say is, when you're looking to grow through M&A, especially as you get to a larger size, it gets tougher and tougher and tougher. So you have to build out that pipeline, or that longer term portfolio of assets that can fill some of those production gaps that inevitably come as mines mature or come offline. We've not been particularly active in that to date, in part because we've been diverting our scarce capital into developing our existing projects, and most recently and materially the Greenstone gold mine. But for example, Greenstone comes with, as we've consolidated basically a 100-kilometer trend. We've got claims spanning that entire trend to the west of the Greenstone mine. Within that trend, there's already a number of targets. There's a number of gold-bearing deposits already, including the Brookbank deposit. And so that's an area that we'll start to look to focus on and surface some value. We've got another 4 million ounces in all categories in our underground expansion or extension to the Greenstone deposit. That's another area where we think we can bring in future ounces into the mine plan at Greenstone. So obviously important for us to look at where those ounces are going to come from. I would say it's definitely challenging. We just don't see a lot out there. And what we do see sometimes has got its own complications as well. So, is it something we would do in the future, starting to, help fund some of these companies that are doing good things? I wouldn't rule it out. I think it would be a great position for us to be in, where we think the return or the strategic value of making those investments outweighs other things we could be doing in our own portfolio, or, for example, at the current interest rate, just paying down debt. Right? Everything is a competition for capital, and really at this stage where we're at, we need to start generating that free cash flow, get on our front foot on our balance sheet, and then you have a little more optionality to divert some funds strategically to those types of endeavors.
No, I agree. That makes sense, and I appreciate your clarity, honest answer on that as well. Like, let's get the debt burden off. Like, how much debt do you have, by the way? Like, just
well, we just took on another 500 million with the acquisition of the rest of Greenstone. So that took us up to sort of $1 billion in bank debt, gross. Net less than that, because we've got cash on the books. So call it 800 or 900 million. We also have some convertible debt around 400 million. 140 of that's in the money, and hopefully that converts here this year. But we've got to manage across that over the next couple of years. Greenstone, we'll spend a lot of cash. We think we can delever very quickly, but we're right now at that inflection point, going from capital and having taken on the debt to now cash flow. And so that just has to be a focus for us in the near term.
No, great. Greg, one more thing, like on the sort of, we talked about exploration side, but I want to talk reserve pricing real quick, because investors, like, they scream from the rooftops, like, oh, the companies have to do more M&A, like companies in general, not Equinox, but companies in general. We want to see more M&A. One thought I had is, like, well, reserve pricing, gold has moved quite violently from like 2,000 to 2,400, or even 1,750 to 2,400. So a massive move, almost $700. But I've looked at the majors. I haven't looked at your reserve price calculations. I think Barrick is sitting at 1,350, Newmont 1,450 roughly. What is your reserve price calculation at the back end, and what would that do to your reserves? And would that maybe alleviate maybe some of that M&A pressure, like, that the investors keep calling for?
I mean, it's kind of a nuanced discussion. I mean, looking at Equinox, we use different reserve prices for different mines, depending on the mine itself and what makes the most sense for that mine and the economics of that mine. You've seen all the majors, and us included, where the reserve pricing has crept up a bit as the gold prices come up. But you have to offset that with cost, right? So you've got a situation where you've got increasing cost pressures that have happened over the last couple of years. You have an increasing gold price as well, which mitigates it, but the margins haven't expanded as materially as maybe the gold price has in absolute dollars because of inflation. And so the challenge is, if you increase your reserve price too much and you reduce the overall margin associated with all of your ounces, you haven't really improved necessarily your economics, right? So you're trying to to balance some resiliency or economic resiliency and return in your minds against the fact that, sure, you can increase the gold reserve price and you can create some additional economic reserves, but the economics of those reserves might not be or won't be as attractive as having used a lower price. So it's a balance, and it's a kind of an analysis to see what makes the most sense. But yeah, over time, of course, reserve prices have come up over time. The challenge is don't bring them up too fast that you eliminate any kind of margin from the ounces that you're mining. You haven't really created value if that's the case.
No, you were the perfect person to ask that question. So talking to an accountant and CFO, it was perfect. So exactly the answer I was looking for. I appreciate that. That was great. Let's talk quickly. Pressure from investors. This is one last topic I want to tackle real quick. Pressure from investors, A, M&A, and B, but also ESG. Like, what do you feel there? Like, how strong is that pressure? What are you hearing?
I mean, yeah, with M&A, it's sometimes challenging, right? You'll have some investors that are very, very keen on M&A and growth. You'll have others that don't want you to do anything. They want you to, focus on whatever you've got and not do anything that's going to rattle things too much. All gold companies over the arc of time, if you plan on being a going concern, over the long haul, you're going to have to do some M&A. Either you're doing grassroots exploration, but you still got to buy the properties. So one way or the other, you're going to have to be looking at M&A and ways that you can replace reserves and resources through M&A. We haven't had a lot of pressure. There was definitely a contingent of our shareholders that were very keen on us acquiring the rest of Greenstone. That's kind of an obvious transaction. It makes industrial and commercial sense. And so that one was kind of an easy one. We got basically nothing but positive feedback on that transaction. Whether we would do something else near term, I think we'd like to digest the one we just did. It was almost $1 billion, and we want to really focus on getting Greenstone up and running. So for us, probably not a near-term priority, or certainly not a near-term priority. Do I think there will be more? Yes, I do, because even when I start looking at the industry itself, it's pretty easy to come to the conclusion that there's probably too many companies and too much being spent on things that are not directly related to producing more gold or developing more gold reserves and resources. And you can get to a point where merging up companies will start to direct those dollars more into that rather than G&A or listing fees or legal fees, etc., management fees. But that's not to say it's easy. There's not a lot out there that we look at that kind of screams this is very attractive from a technical perspective and a upside perspective and evaluation perspective. Those opportunities are kind of rare. On ESG, that's interesting. There was certainly a couple of years ago a big push on more ESG reporting. I would say my general comment is that certainly Canadian mining companies and most Western mining companies, they do the right things already. Generally, they, from an ESG perspective, they are doing the things they should be doing. They're honest operators. They're certainly trying to do the right thing for their shareholders and the local communities and the governments where they operate. Probably the bit of the gap was how well the data from that was being collected and then reported. That has improved massively. Certainly at our company, we've put a lot of time and effort into putting systems in place to capture that data and then report on that data. And we put as much as we can quarterly on the website, and we put out a big report every year, and we respond to multiple large institutional requests for specific ESG meetings and ESG reporting. So that's improved. I would say that the topic itself is probably not discussed as much as it was a couple of years ago. And what I personally, what I'm seeing, this is anecdotal, is that it is something that comes up a lot still with European investors, and they might look to the ESG scores to determine whether or not they can make certain investments. In the US, I think a lot of the ESG funds started to have redemptions, right? And the popularity of investing in those sort of social or ESG focused funds seemed to kind of come off a little bit. And you had some states basically say, if you're using ESG as an investment criteria, you can't. They made it so that you can't use state dollars in those types of investments. So maybe the pendulum's swinging a little bit in the US. Canada is probably right in the middle. It's still very important. I don't see any downside to reporting what we're doing and getting the data out there and making sure people are aware that that mining companies are doing good things in these areas. I think it's important, even for the future of the industry. We need young people to have a positive view of mining and resource extraction, be interested in going into the business, because we're not seeing enough of that, and labor is becoming an issue, and we do need people to feel comfortable coming into this industry, and ESG reporting is one way that the industry can convey that.
I think a lot when we talk about ESG, a lot of people think of the E part, the environment, and of course we're in mining, so that is a big part. Let's not downplay that. But I'm curious, since you're an accountant, allow me that one last question on that topic, Greg. Have you priced out sort of what it would cost, for example, to electrify Greenstone, complete mining fleet? Like, how far away are we still from it being cost competitive, even?
I think. And I'm probably not as up to speed as I should be on the latest technology. I know that, haul trucks of the size that we're using at Greenstone, the first electric ones are just being tested out now. Like they are not commonplace. To do that at Greenstone, you'd have to do something with overhead power lines, which is being done at I think some copper deposits at Greenstone. That just would not be feasible. And, in building Greenstone, we would have loved to have it, 100% grid powered in Ontario, but the timeline to permit an upgrade of the power line that gets out to Geraldton would have taken years and years and years. You wouldn't be able to build the mine. And in our case, we had the Trans-Canada natural gas pipeline going right beside the project, and we were able to tie into that at a very low cost. So, you're still looking. Would we prefer to be, hydro power, grid power, of course, but the project wouldn't be here if that was the entire focus. And I can tell you, from the S in ESG, the social side, if you go to Geraldton now compared to when, 3 years ago when the mine was just a development project, it's just so much better. You're seeing expansions in businesses. People are moving back. The quality of the town, the infrastructure, the environment there is just really good for people. Locally, certainly the First Nations communities as well. And we're doing a lot of work in the community. We're doing this ride to Greenstone, and maybe we can talk about that. But, we're going to raise, well over $1 million and deploy much of that into the local hospital there and really bring that back to the community. So, we can focus on the environmental side, and we should, but you have to have that trade-off of bringing, that economic benefit from a project like that, not just to shareholders, but to the community in a time frame that makes sense.
No, I appreciate you clarifying that. That was awesome. And you teed it up for me for my last question, but I have one more question I have to ask you before I ask you my last question, which is about the S side of the ESG here. We have to talk about the end goal. What's the end goal for Equinox? Like, what is your plan? What is the mission? What is your personal goal?
Yeah, so when we started this company, and Ross was a big part of sort of articulating this. We wanted to build a large scale major gold mining company here in Canada, headquartered in Vancouver. Gold Corp was sort of out with the Newmont acquisition, and we saw an opportunity here to make a really great sort of America's focused gold company. Ross's first company was Equinox. He'll often say, "This is my last public company. It's Equinox." I think he'd love to see this thing grow and pay dividends and help to fund some of his philanthropic projects that he's working on. So we've always wanted to grow a large company, a large gold company. We've always said, we want to get to this 1 million ounces. We have a vision or a goal to get to 1 million ounces of annual production. And, there's nothing particularly special about 1 million itself. If it was 900,000, that's fine. If it's, 1.1 million, that's fine. It's really just a general indicator of scale, investability, liquidity, market trading multiples, the ability of the company to continue to grow, but also have enough capacity to grow for the long term, right? And so, as an indicator of scale, that's our 1 million ounces has always been the target. We're getting very close here with the acquisition of the rest of Greenstone, and so that remains our goal, is to kind of get there, and then over the next couple of years, we'll think about what that means going forward. Do we look to maintain this sort of level of scale, or are we looking for more growth? I think we want to get complete what we've already focused on, or already kind of communicated our goal was, get to that sort of 1 million ounces and be really successful at that level, and then kind of figure out what comes next.
Are you going to reach the 1 million ounces organically?
We certainly can with our existing portfolio. I won't rule out divestitures and acquisitions as sort of the arc of getting there, because we've been doing that since we started this company. But with the 40% we just acquired at Greenstone, and with the expansion at Castle Mountain and the expansion at Los Filos and our underground expansion that we're planning at Aurizona, if we develop all of those, you can pretty easily get to that 1 million ounces of gold production a year for sure.
No, fantastic. That's an awesome goal. Like 1 million ounces, it's just a magical number. It's like $2,000 gold. It's something that attracts.
Nice round number. Yes,
exactly. Let's talk about the last question here, the right to Greenstone. And you almost gave it away, I think, in your previous answer, talking about ESG and the S side. Tell us about it. I always like ending on a happy note, of course. And let's talk about the right to Greenstone, Greg.
Yeah, it was kind of a novel idea. The company, we're officially opening up Greenstone this summer. It's all the way in Ontario. We're here in Vancouver. We've got a lot of people in the company that are avid bikers here. And we thought, wouldn't it be cool to tie in this ride to the opening, and also look to raise money from the industry, from our suppliers, from everyone that's been involved in bringing this project to fruition, and then donate that to the local hospital in Geraldton, and really, do something really good for the community as part of this mine opening. I don't know if it's been done before, but it's something that we kind of had the idea, we advanced it, and it's really taken off. We've done very, very well in terms of donations. We're easily going to clear $1 million, which was our initial goal. We're going to have people from the company, from all of our operations, really in sort of a relay, starting in Vancouver and riding right across Canada to Geraldton in Ontario, and arriving later in August, just in time for the mine opening. Over the course of that, the ride, we'll have updates on the Ride to Greenstone website, which you can Google and you can find or link to through our website. And so you'll be able to see things as the ride progresses. I'll be participating probably later on in the ride. Ross will be participating. And of course, we'll have people from Brazil and Mexico and United States participating as well. So a pretty neat idea. Our local mines are each going to do something a little more locally, and raise some money also for the communities where they're operating. But the big splashy sort of donation is going to be in Geraldton, as in connection with the opening of Greenstone.
Fantastic. No, I love that. And I'm really proud of our industry personally, because I've seen it impact me personally on various things. And we don't need to go into details, but I'm proud of it and what the industry can achieve. And we got to talk ourselves up a bit more, and we should be doing that. So
the response has been great. I mean, the support we've gotten has been, it's been probably more than we expected, and we're really happy for that. And I think it's just going to be a great event.
Phenomenal. Greg, you've been extremely generous with your time. I really, really appreciate it. Thanks so much for joining us here on the Gold Newsletter. I'm sure we'll have you back maybe in September or so, after our first, what is it now, almost a quarter of production then at Greenstone. We can do a bit of an update and see what you guys have been up to and how the ramp up has been progressing. So really appreciate your time, Greg. And yeah, let me do my outro here real quick. And everybody else, thank you so much for tuning in here to the Gold Newsletter. I always enjoy talking with producers. And if you've noticed, we've gone for 37 minutes here already. Really appreciate you tuning in. I hope this was informative for you. As I said before, we're doing these interviews for you. Let us know. Do we ask the right questions? Did we ask the right questions? What are your thoughts? Please leave them in the comments down below. And of course, if you haven't done so, hit that like and subscribe button. We tremendously appreciate it. Thank you so much for tuning in, and we'll be back with lots more here on the Gold Newsletter channel.